Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Wednesday, January 25th edition of Benzinga's PreMarket Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. Today's show is brought to you once again by Chaikin Analytics with their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions and is all presented in an easy-to-understand platform. To learn more, visit chaikin.com/premarket. That's Chaikin, Chaikin analytics.com/premarket. I'm putting the link into the chat right now. You can see it on the screen because that's what the platform looks like. We're looking at what stock is up there, UTX, because that's one of the stocks to report. We also have, a lot today. We got Alcoa, we got Boeing, we got eBay later tonight, WDC, so we got Qualcomm, AT&T, F5, a lot to get to. We also have two guests today. First at 8:15, Chris Temple. He's the editor and publisher of The National Investor. And then at 8:35, we'll be joined by Keith Kern. He is the founder of Traders Toolbox. Joel, how are you doing this morning, and how are the S&Ps doing?
Doing excellent on this Wednesday morning. Everybody get your Dow 20K hats out. S&P's trading up 9 future. That implies about 72, 75 points of upside, getting near to that magic 20K level this morning. Crude not faring so well, down 59 cents at 52.62. Still been in a little bit of a trading range here, so maybe we will get a trade out of crude here, range bound between 50 and 53 and change. Gold trading down $6, but still ahead of that magical $1,200 level. But silver has lost $17 as we are trading down a few cents here at $16.97. Good morning to you, Dennis. Do you have your Dow 20K hat on?
Don't have it, but I have it on order.
You do. Well, you better.
I don't know if it's going to be here in time. Better show up today.
Did you get it from Amazon?
Yeah, so I got overnight, so hopefully it's going to be here today.
All right,
I don't know, what are we going to be? We're going to be like 10 points away from here is what I just saw on Zero Hedge. Just figuring out the Dow futures looking like we're 10 points away. Can we hit it today, or do we have resistance there again at 19,999.67?
Resistance? You said, is that a technical term? Resistance? Did it take? I heard that Bill Williams or Bill O'Neill's taking that out of his textbook. There's no such thing as resistance.
Just support and trends.
Yes.
And buy. There's no sell button.
Yes,
anymore.
I told you I was ripping that sell button off my computer, and somehow
you did that. And ripping that sell button off in Western Digital has served you well, man. The Western Digital's up another 4 points today.
You guys,
and they didn't even report earnings.
They're
just piggybacking Seagate.
I think that I'm just gonna have to sell this just so I don't have to. Just so you don't mention. I feel so jinxed here. Hit 81.20 here in the pre-market trading, moving off the STX earnings. Let's go to Seagate Technology. Let's see how they blew things away.
Mr. Spencer.
Yep, I got your numbers for you. They see, excuse me, Q2 EPS $1 versus $1.08. Revenue $2.9 billion versus $2.83 billion estimate there. So a beat on the revs and a slight miss there on the EPS.
They missed. It's up 12%. Did they miss anything?
I'll miss that.
You could be right. I didn't even look at the numbers.
That's what it says in the Pro, man. I'm just reading off the Pro for this one. So
what's the guidance?
Yeah, I didn't finish. God, all right. Come on. They also see.
I'm in my tack mode.
They also see fiscal year 17 EPS at least $4.50, and the estimate was $3.79. They see Q3 sales at $2.7 billion versus $2.62 billion. So good sales guidance and good fiscal year 17 EPS guidance.
My algorithm tells me that guidance is greater than current quarterly profits. And when you blow away the guidance, you're going to go up. And STX up 41.80 here this morning blowing through all the major resistance points here, Joel. There is one little pesky little high on the chart at 41.45, which is back on December 13th. Can we open above that is the question.
Sure looks like it will right now. Let's check the volume trading on this nice move up here in STX. Only 39,000 have traded. Let's check out the daily volume on that. The daily volume is halfway decent, not enough. I don't know if we can support that high of an opening. No, traded 8.5 million yesterday. But Dennis, that's a good number. The pre-market high is 43.20. Not a lot of stock traded up there. Just half and whole numbers. I mean, if you got a good size position, or if you took any options home on this, I'm not sure how bad they got you on the premiums going into this report, but I'm sure you're going to have a lot of your 39, 40, 41 call sellers out there, maybe to take some profits. But that pre-market high, I don't think we're going to see that of 43.20.
And obviously the pure sympathy play, which reports tonight, is Western Digital WDC, and it is trading up 5% here in the pre-market, and was trading up, as Bob Wire was saying, up to over $81 there last night. Just in sympathy here, and Joel, the direct beneficiary here, obviously, because this is in his no-sell portfolio. Is it staying in your no-sell portfolio?
Why not? I mean, I really
I know. It's worked the whole time. Why not, Joel?
I'll tell you, there's some monthly highs around the $85 level. I said that yesterday, if it got up to 85, so there's a potential target. I see 3 monthly highs. This was in the end of 2015. We'll keep an eye on that. Pre-market high so far, though, 81.20, backed off a little bit.
And then if you want to keep looking for sympathy plays, like obviously Western Digital, like we said, is the pure one. But I was reaching last night when you see this thing up, I'm like, it's going to drive up all these other stocks that are similar. NetApp was trading up a little bit last night. It's bid up here this morning, so NTAP. I'd watch that one. Bid 37.83 here right now this morning. Closed at 37.52. You could look at like a Broadcom AVGO, which actually, yeah, it is higher. There was just a 97.30, but that's an off the board trade. It was trading up at 199 here this morning. It is bid up at 198.03. So you never know. You could get a little lift there. I think it's going to lift a lot of the technology stocks. Even like a Cisco. I mean, Cisco is a supplier, to, you're looking at STX here. So it wouldn't surprise me if, Cisco got a little bit of a lift. Or you could even go into some of the other suppliers like Marvel, MRVL. We're reaching a little bit here. But, when you see a stock like Seagate up that much, we're trying to give you, who the suppliers are and, who potentially is the sympathy plays here. That could get an extra little bit of a bid off of this 12% move in Seagate.
When I bought that Western Digital, it was yielding 6%.
I know. At Seagate, if we go, let's just, go back to the beginning, or actually into May of last year, Seagate got down to $18 and it was yielding over 9% down there. And everybody's like, is it dividend safe? I was even questioning. I don't know if the dividend safe. I'm seeing this thing just go straight down here. I'm like, eventually you think they're going to cut it. No. It was safe, and it came back with a vengeance there, and it turned out to be one of the better performers for 2016 because it started the year around $28, and obviously ended the year around near 38. So, a good performer. Now it's at 42 here. So don't call it a comeback, and, we're really giving this stock a lot of credit. But when you go to the monthly, it's still a long ways from its all-time highs. The all-time high on Seagate STX back in December of 2014 was $69.40. So if you're thinking, the stock could eventually get back to all-time highs, it could still have a ways to run.
All right, let's move on. We got a lot of other earnings to cover.
All kinds of earnings, and we got 2 guests today here, so we're going to have to fly through them there. But let's go to Boeing. Boeing, it was flying. It's still flying a little bit here. It's trading up in the pre-market. Broke out to a new high there. 160 had been pesky resistance. We had talked about that seller. Finally took it out. Ended up closing above 160 yesterday. Now we got earnings driving a little bit higher there. Trading up $1. Spencer, what did Boeing have to say?
Q4 adjusted EPS $2.47, sales of about $2.86 billion versus $23.57 in the same quarter last year. So a little bit of a decrease year over year. They also see fiscal year 17 adjusted EPS at $9.10 to $9.30.
Joel, technicals.
Blew it out, Dennis. I got 2 different highs here on my platforms. On one platform, I got 164 even. On the other, I got 163.10. You're breaking out of a new all-time high, so really the only thing I can give you is that former high, 160.93 is support. down to the close of 160.55. Basically, new all-time highs for Boeing. And the only thing I could think about this one is, when Trump tweeted that negative statement about Boeing and the the Air Force One. That's the
Knocked
last.
it down to like 147.
Yep. Didn't even trade below 150 during the session. Here you've added 10 points.
We should develop that fade Trump algo. Everybody's going with it, but we want to go against it because there was, I think even David Faber had caught on to that actually, that you'd be better, in these 3, 4, 5%. Remember General Motors? That was a huge one too. I mean, he said something negative about, was it General Motors? I think it was. And it was down 2% in the pre-market and opened flat that day and ended up rallying 3, 4%. There's some money to be made fading these Trump tweets.
All right, just go to, since we just mentioned GM there, it was a
Sure.
rating or stock of the year.
Morgan Stanley's top pick is General Motors. That's why you're seeing GM trade up 50 cents here in the pre-market. Nice lift here. 4.05% dividend. We've loved that for a long time. I mean, GM has had a pretty good couple of months. $31 up to $37 now. I feel like it's kind of moved here because GM, we sat in a range in 2016 in like a 3 or 4 point range, and now in the last 2 months we moved up 6 points. So hard for me to really jump on board as an investor up here in General Motors. Like I said, I like Ford better just because Ford hadn't run yet. So I did buy a bunch of Ford at $12.60 just about a month ago. It's gone nowhere. It's still at $12.65 here, although I think I did get paid 5-cent special dividend. I did get another 5-cent dividend off it as well, but 4.74% dividend. So I like Ford a little bit better, but GM is Morgan Stanley's top pick for 2017.
It's is that Adam Jonas over there at Morgan Stanley? Because he's been pretty.
I don't
yeah.
know.
Brunt just gave me the nod. Pre-market high in General Motors is 37.60. Let's look at the high of the move here. We did $38, folks. Keep an eye on $38. It's hard to ignore those three highs. This was back at the beginning of January from 38.11 to 38.16. So someone is trying to sell 38, they'll let it get above a little bit 38, and then they go and sweep out the book. So 38.16, that's been the high of the move.
Then looking here at a couple other earnings plays from this morning here and some good ones. UTX actually reported earnings just a few minutes ago here. Stock is now turned into the red. Spencer, what do UTX have to say?
Q4 adjusted EPS $1.56. That's in line. Sales of $14.7 billion. That's also in line. They affirmed their fiscal year 17 outlook. That's adjusted EPS of $6.30 to $6.60, which the estimate was at $6.60, and the sales of $57.5 to $59 billion. The estimate was 57.3, so a little bit better there, but affirmed prior guidance and in line earnings report.
It's getting hit here a little bit. Bob Wire said to watch aerospace. It's too early, though, here to say if this is going to be, interpreted as bad or not bad because it's only down 0.5%. Like usually when I'm looking at, sympathy plays, and this is, a good, teaching tool here. Personally, I'm looking at sympathy when stocks are moving 5-10%. I'm looking, okay, what else in the sector? Stock moves 1 or 2%. You don't get much of a sympathy move because the leader isn't even moving that much. So, we're only down 0.5% here in UTX. If the bottom falls out in UTX and it starts to fall down 3, 4, 5 points, or saying scenario analysis, then yes, you start to look at maybe some of the other, aerospace and some of the other stocks in the sector there. But when it's only down 0.5%, hard to be a sympathy move here. And the market hasn't even decided if they like this report here or not because it could get down to 110. It's already back at 111 here. So market is still digesting the UTX report.
And I do like that 110 area. One note, Lockheed Martin did get hit yesterday, so a little trend here in the industry. But that 110 area, it was a little bit of resistance. It consolidated there, so I'm looking if it gets back down to 109.5, 110. I look at that more as support. Then I'd see this thing really getting crushed today if we do go into rally mode. Always people will be looking at the mark there, the close, 111.61. That was 8 cents off the high of 111.69. So nothing to be determined yet in UTX.
Aluminum's wild here because we've had multiple companies report here. We had Alcoa last night report, and they hit Alcoa right off the hop. And then they turned around and started buying it all the way up. They knocked it all the way down to 36.20 on the initial report. And then they bought up into the 39 handle there. So AA was a wild range. It's still trading up $1 here in the pre-market. Give us the Alcoa numbers because then FCX reported here this morning too, and it's going the opposite way.
Q4 adjusted EPS 14 cents versus 19 cents. Missed their revs of $2.5 to $2.46 billion, so a slight beat there.
We're going to fly through here because we got our guest, but FCX earnings there too, Spencer.
Oh, yeah, let me pull that up. Sorry about that. I was so
Down 50 cents.
All right. Freeport McMoran, we got Q4 adjusted EPS 25 cents versus 33 cents, a miss there. Sales 4.377 billion versus 4.42, so a miss there as well.
FCX was trading up in sympathy with Alcoa, and it's given it all back on its own earnings report, obviously, and now it's trading down significantly after having a really good day yesterday ahead of the earnings, giving back almost the entire gain.
Yeah, just keep an eye on the mark on both of these. 37.50. That was the closing Alcoa. A buck above that. FCX went off the board yesterday at 17.02. Just look to see if we get back to that area. All right, it's time to take our first break of the day, and we're going to bring in Chris Temple, editor-publisher of the National Investor. Get a fundamental macro outlook on the market with Chris. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. I'm your co-host, Joel Alcon, along with Dennis Dake and Spencer Israel, and we are joined by Chris Temple, editor and publisher of the National Investor. Chris, how you doing on this Wednesday morning?
Well, great. Good morning, guys.
All right. Thanks for taking time out from your busy schedule to share your outlook in the market here for the market with the new administration coming into place. A lot of changes taking place already in this first week. Give us just a broad outlook here, and then we'll get into some individual sectors and stocks you're looking at.
Well, I'll tell you, I've told my members, guys, that basically you have to throw away the old playbook and we need to try and cobble together a new one. You know, we have a new administration that in most respects is going to defy traditional economic and investment labels. There's going to be some great beneficiaries of the policies that we'll see from President Trump and Congress. There's going to be some that won't fare so well. I'm looking at things that, to me, guys, are no-brainers. Whether the market finally cracks 20,000 today on the Dow is really a sideshow. We've already had a new high in the S&P. We've already had a new high in the NASDAQ. I see small caps in some ways rolling over, however, a little bit recently. That concerns me. So I think that we need to approach the market, whether it breaks 20,000 or not, in a couple of ways. First of all, understand that we're going to see more in the way of sector rotation and some internal slugfests among different sectors, more than we're going to see, I think, the broad market add terribly much to its recent gains. And secondly, I think we can get out in front of some of these sectors and really take positions in some of them and some individual stocks at really attractive levels.
All right, so let's start. You mentioned when you came on the energy sector here with crude hanging out. It's over $50 now, and supposing more cuts coming from OPEC. Are you looking at some of the drillers, some of the integrated oils, or some that maybe off the major radar?
Well, actually, all of the above, Joel. I think that the mood in the industry, even though I think we've seen the highs for the oil price and we're going to have to consolidate for a while because the global economy is still fairly weak. And also, even if OPEC doesn't cheat, we're seeing production ramp back up in the United States. So I want to consider who is going to do better as the marketplace comes to grips with the fact that, okay, we're not going to see $30 again. We may not even see much worse than the high 40s in a big sell-off, and that we're at least at some equilibrium place. I like, for example, Energy Products Partners, EPD, one of the Cadillac of the master limited partnerships out there. It's had a nice move, still has a 7% or near 7% dividend yield. It's one that I think investors who are still looking for yield and still looking for some rebounds can take positions in that. Pioneer Energy Services, PES, is one that's a big driller and service company in the Permian. And one of the interesting sub-stories here of energy is that after all of that time, guys, when the Saudis were trying to squeeze everybody else out and get market share, they kind of lost. And so they're now having to cut production, or at least say they are, and it's going to benefit U.S.-based companies. And so a lot of these drillers that are in high demand, I think they're going to do really, really well as the rig count goes back up, even if we don't see any further gains to oil and gas prices. Finally, in that area, before we get to the real hot energy sector, is I want to talk about a little tiny off-the-radar company called the Enterprise Group. Little Canadian company. They have multiple businesses. They're a consolidator in energy and infrastructure. If you have an account where you can trade Canadian stocks, the symbol is simply E. If you need to buy it over the counter in the U.S., it's ETOLF. This company went down to almost nothing, but it's really roaring back. They've got free cash flow. They may even post positive earnings again in the first quarter. They're selling for a third of their book value. It's a compelling story, not only in the energy space, but don't forget that the Canadian government is also looking at some pretty substantial plans for boosting infrastructure spending.
Any thoughts on Apache? We're getting that out of the chat here from one of our listeners. Any thoughts on Apache, APA?
I don't follow it real closely, but I'll tell you, I think that I am, from present levels, I am more bullish longer term on natural gas than I am on oil. And any company that has got some good optionality, that has shut down some production, but is able to bring some on in time, I think it's going to do really well. I don't think we're going to see the $2 level again anytime in the near future, if at all, for natural gas. The fundamentals have really flipped around. And don't forget, too, guys, that we export a lot of natural gas. Not only are we going to see a ramp up of some of the LNG export facilities now under the Trump administration, but consider what we export to Mexico. In fact, a company that is profiting very nicely from our export of natural gas to Mexico is CSI Compresco. The symbol is CCLP on that. That has had a monstrous move from its lows and still has a double-digit dividend yield, which they just reinforced.
All right, you can find some of these stocks here that I haven't been on my radar. Another sector that you're interested in is uranium. Give us your thoughts on why you like this sector and individual stocks, and that will reflect that move in uranium.
Well, I'll tell you, most people remember back in 2011, Joel, when we had that disaster, the earthquake and tsunami. It compromised the Fukushima Daiichi plant in Japan, and the uranium sector has been in the dumps ever since. But there is going to be potential rip your face off rally coming before too terribly long. You've got a lot of utilities all around the world that have been playing this game of chicken and not tying up fresh supplies, multi-year supplies of uranium, hoping that they can wait until the last minute while the price is low. The spot price of uranium recently hit a multi-year low of around $18 a pound. It's back up to 20. It needs to be 50 for most production to be profitable. And this cannot last too long. I mean, this is like when oil was in the 20s and perhaps even worse. But here's one statistic I want everybody to try and digest and keep this in mind in the context of a Trump administration that has its America First policy, that wants us to have energy independence, and also keep it in mind as we look at what utilities need to do. Roughly 1/5 of all of our electric power in the United States is generated from nuclear power today. In the last full year that we have statistics for, 2015, U.S. utilities bought 56 million pounds of uranium. Less than 4 million pounds of that came from the United States of America. The company that is going to benefit the most as the new Trump administration and as an Energy Secretary Perry look at this ridiculous situation is a company called Energy Fuels. It's an easy symbol to remember, 4 U's in a row. It's UUUU. This stock, Energy Fuels, has doubled already from its lows of merely several weeks ago. It's got a lot farther to go. It is, I think, one of my home run stocks for this year. And the reason being, the company produces just shy of 1 million pounds a year right now. They have 3 processing facilities in the U.S. They have the biggest footprint in the U.S. of domestic companies. And this company, in almost a blink of an eye, can multiply that output by 5 or 6 times. Once the demand from utilities, the new orders come, and once the administration realizes, hey, why are we getting 3.5 or 4 million pounds a year, 5% or so of our needs, 6% overall from U.S. sources, and we're getting almost 40% of our uranium from Russia and Kazakhstan and Uzbekistan.
Another one that's
And
popular. Chris, I was just going to ask you,
yeah,
sorry, Dennis Dick here. I was just going to ask you about uranium energy, if you follow this one, UEC, because this is one that's starting to pick up in the headlines here too. Traded 7 million shares. It's starting to get some volume here on it, yes, or in the last few weeks as well. UEC has went from $1 to $1.80. Is this one you follow?
I do follow it. It's not an official recommendation of mine right now, like Energy Fuels is, but it's a good company. I know the management. I have kind of an indirect exposure to them because I told people a while ago, before it took off, to get back into the ETF in the space, the Global X Uranium Exchange Traded Fund. The symbol on that is URA. It has positions in most all of the producers and most all of the companies that have significant reserves, including UEC. But that's going to be a big winner also because it has production and it has also the ability to add more production.
All right.
Is that the safer way to play it, you think, going with maybe one of the, like an ETF, just to get some diversification? Because obviously these are pretty small companies, some of these.
Well, some of them are. URA is a good one, or if you want to get J on a New York Stock Exchange. It's the Cadillac of most all the companies in the world. It has utility operations, and they're all along the food chain, not just a uranium miner. And it will do well also. Cameco just a week ago had to lay off some people again because we're still forming this bottom in the uranium market. But I think things are turning up. And I mentioned Kazakhstan a few minutes ago. For several years, it has been the biggest incremental increaser in production in the world, and that just ran into a wall. And in fact, they recently announced that they're going to have to cut uranium production 10% this year. So the supply-demand situation, which has been lousy for the last 3 or 4 years, is about to flip, and it's going to do it dramatically, I think.
Chris, before we let you go, you just gave us a lot of positives, things to look for. Are there any sectors or issues that you're kind of shying away from here under the new administration?
I think that some of the cyclical stocks, guys, you mentioned Freeport when you started. I regret that I didn't tell people to trade back into it. I was advocating trading that back and forth when it was in the single digits, but this last move, talk about a rip your face off move, that's at a big one. I think that a lot of people have gotten ahead of themselves, and I'm speaking generally, in some of these cyclical and some of these infrastructure themes. I do not believe that we are going to get the oomph from Trump and his policies, even if he gets everything he wants, that a lot of people are pricing into some sectors. So there are some good individual companies in infrastructure spending. Great Lakes Dredge and Dock, GLDD, one of my favorites. We got back into that at 3. It's at 5. It'll be $10 in a year or two. But apart from individual stories where you've got some deep value, I just think that people are too far ahead of themselves. And if you're talking about the big steel, the big iron ore, the big copper companies, I don't like most of them after this rally. I think they're too expensive.
Chris Temple, editor and publisher of the National Investor. You can follow him on Twitter at NatInvestor, giving us a good outlook on the market. Chris, really appreciate you coming on. We'll talk to you again soon.
Hey, my pleasure, guys. Have a great one.
All right, 8:30. S&Ps continue to chug higher, up 875 at 2283 and a quarter. Dennis, we don't talk a lot of uranium, and uranium stocks here is some of these are lower priced. Any interest in them?
Well, you know what? I regret actually because we talked about one on the show, that Uranium Energy UEC, about a month ago there, and it was around $1, and we were looking at, saying, oh, maybe uranium starts to get some life there, and, I remember us talking about, I remember even writing it on my sheet, to check this out as, potentially, to buy for a swing trade, and now I look at the thing and it's $1.80, I was like, yeah, I wish I would have bought that one, but yeah, we don't talk about them a lot. I don't follow this sector at all, but it makes sense everything that Chris is saying there. So the only problem is some of these stocks have run now. So you like to buy. I like to buy more on a pullback as opposed to chasing stocks, because I know historically when I chase stocks I lose money. UEC has went from $1, just talking a month ago, to $1.80 here now, so it's up 80%. So now I feel like you're chasing, and sometimes it works. There's a lot of good traders out there that do chase moves and they have tight stops and they figure out how to play on those sides. It's never worked for me. When I'm chasing stocks, I lose money. So that's why, this sector's maybe gone a little bit too far for me.
Just quick comments here on NRG Energy Incorporated. Nice move up here, just 12.5 to 16.5 and change. Made higher highs in the last 4 sessions. You want to see that trend continue. Kind of looks like you've had another move up and then a consolidation phase. So see if it hangs out here for 2 or 3 days, and it's already been there for one. Get a little consolidation, but if you go to a longer term chart here, has a gap to fill to just under $18 here. So perhaps get a little consolidation, but can't see any reason to let it go right now. 8:32, Dennis, you want to go back into cover the remainder of the earnings or hop into a little ratings?
Let's look here just at imbalances quickly because they just came out. There's a couple interesting ones. Again, I'm seeing a trend here. Citigroup seems to have a buy imbalance every day. I know the banks are strong here today, though, but it's the one that has the biggest buy imbalance, 142,000. I always like these ones when I find these trends, because it usually just means there's an institution, maybe even one that's just, buying it at the open every day. And sometimes that can be a moneymaker if you're early enough on the trend. Citigroup, 142,000. I think it's been 3 days in a row that I've noticed a big buy imbalance in that. And bucking its previous trend, which seemed to have a sell imbalance every day. Now it's at a buy imbalance for 2 days in a row. Is General Electric, 153,000. Maybe some institution or whatever is looking at it and saying it's come down here enough where I like the value, 3.19% dividend, but seeing a little bit of a buy imbalance there. Alibaba had a big day yesterday, gave a lot of it back, towards the end of the day, but 82,000 shares to buy here in Alibaba, so that is moving up. And then you got Verizon, another 65,000 shares to sell in Verizon. I just want to, mention here that, we talk about this, and we haven't talked about it in the show for a little bit, but the ACP strategy, analyst chase price. And, this is a classic strategy that, I employ in my trading, and that, you see a stock that has a bad earnings report in the morning, not the overnight, because the analysts haven't had time to weigh in on it yet. Then the next day, sometimes you see follow-through downgrades. So Verizon had a bad day yesterday. Another trader was asking me, it's pretty cheap here, should I buy it? I was like, you might want to wait, because sometimes you get those follow-through downgrades that will bring it down the second day, and that's exactly what we're seeing here today. And Verizon getting multiple downgrades here this morning, and it's trading down another 40 cents. So I get interested, though, in Verizon here. It's starting to, look, it's went from 55, where I wish I would have held the short, after the ex-dividend day. Now it's down the 49 handle here. Starts to get down here a little bit further. It starts to get interesting now.
Yeah, pair of lows, 49, 29, and 31. This was back at the end of November. Before we go to our next break, Macy's, Dennis, you 5% yield here. You kept me out. You kept me out of this one. I thought there was
staying out.
Yeah, you're staying out.
You know why?
How come?
And it's just. And it was me driving by that Oakland Mall, looking at that sign and the 3 major box stores. I talked about this a couple weeks ago too. What the 3 major box stores were: Sears, JCPenney, and Macy's. And I saw what's happened to Sears. I saw what's happened to JCPenney. I was like, Macy's is starting to close stores. Is Macy's going the way of Sears and JCPenney? It's obviously not in as bad a shape as those two companies, but the trend is not your friend here. I mean, Macy's has been sold hard. I think there is reasons behind the selling. This was a $70 stock a year and a half ago. It's now a $30 stock. And you're looking to say, man, though, 5% yield, I like that. Yeah, but if this company's really in trouble, as a dividend safe, that's what you got to start asking yourself too. If I was really jumping into, if I wanted, and I'm not in any of these stocks, but if you're putting a gun to my head and say, which department store would you like to buy? I'd rather own Kohl's. And the reason I think, Kohl's is a little, lower market, like Macy's a little more upscale stores, and Kohl's these standalone little boxes stores. They've got discount. They kind of got a little bit of discount retailer to them, and people like the deals right now. And Kohl's has that still a little bit going for them. So, but I don't like any of them. Kohl's 4.96%. So I like Kohl's better than Macy's, but I really don't like any of them.
All right, it is now 8:35, and we got another good guest coming on. That's Keith Kern. He's the founder of Traders Toolbox. We'll be right back with Keith.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Chaikin Analytics. We are trying to track down Mr. Kern here this morning. So we're just going to go back with our regularly scheduled programming, and we see J.P. Morgan trading up $1 here. Dennis, what's the news?
I'm not the news guy, so is Spencer still, or he's working in the
I got
background
it. I
here?
got my trusty Benzinga Pro
Let's
here.
go.
J.P. Morgan. I see absolutely no news here on J.P. Morgan. We are trading up $1.03. We're trading up. Let's see, that's 1.2%, a little bit more than the market. Maybe it's just getting a little giddy up here with the overall S&Ps. Just
I mean,
traded.
all the financials are strong here this morning. This is stronger though, so I wouldn't be surprised if there is something that just broke on this here. Obviously, me and Joel on the live radio show, so
Okay,
we're
wait,
not
I'm
able
sorry,
to
what's
easily
going
check
on?
the news feeds.
Wait,
Do
what's
you
going
have
on?
something, Spencer, on JP Morgan?
For JP Morgan? Okay. uh, there is some news on JPM.
I
News
think.
desk is coming out with
Yeah,
this.
Yeah, I think
trying
they
to
just got some business from State Street, is what I saw. Yep, State Street and BlackRock. They got some new business here. Trading at 85.80. What I'm looking at here is to fill the gap on that wild earnings day when Dennis took some money, took a lunch from me. You need to get to 86.10 to fill the gap. That's what I'm looking at. Above that, boy, above 86.10, you got a lot of air. All-time high, JP Morgan, 88.17.
Banks are all strong here today, though. Even over in Europe, you can see Deutsche Bank trading up huge here this morning. It's up 2.87%, breaking out to new highs. Credit Suisse. The banks are back. And you're looking here, and you had a little sell-off here for 3 or 4 days, and then you've had consolidation here, but they're coming right back up into the tops of these ranges here. I mean, Bank America here, we're at 23.24. The high of the move for Bank America has been 23.39, within 15 cents here of the high of the move here for BAC. So you got to consider a couple of these other ones have sold off a little more significantly. Goldman Sachs, has sold off over 10 points from its highs, but it's coming back here too. It's up 2 points here this morning as well. Citigroup, I've already talked about this one with the 226,000 share buy and balance. It's rolling back here. Morgan Stanley, 43.20. It's within a buck, and just over a buck of its or its recent high of the move as well. So these banks are all rolling back here, and it's hard because we were saying this before. Even when they were pulling back, 3-4%, you pull back on these things. There's so many institutional managers that want them. They're probably going to start licking their chops. And that's exactly what we see. We see 4 or 5% pullback in the banks, and all the institutional money starts coming back into them again. So hard to fight these trends here on the banks.
Bank America, I'll just give you a level here. Bank America, we're currently trading at 23.26, up 31 cents. Looking at the daily charts here, we know where the resistance is. It hit this, I believe, on earnings day. It hit this a few other times. 23.41, that's been the high of the move. Did that back on the 13th, and then you had another cluster of highs at the 23.39 area back in December. So that's your bogey on the upside here for Bank of America.
Couple other stocks here, earnings last night that we didn't get to earlier in the show. Texas Instruments had earnings here after the bell. The stock was kind of a yo-yo. It rallied, then it dropped, then it rallied here. Spencer, if you're still kicking around, what's the TXN results look like?
I can get you the TXN results here. Texas Instrument had a beat here. Actually, its report of $1.02 does not compare to 82 cents. Sales were better, 3.41 versus 3.32. Bumped up guidance here for Q1. They're liking that for the EPS and for the sales. And they named Brian Crutcher as the COO. 77.32 is where the stock went off the board here. Spike up to 79.90. That's got to be an all-time high here for TXN.
You saw a spike of 79.90?
I did.
When did that happen?
Oh, I mean,
right on the initial number?
I mean, it's here. I tell you, these platforms are. I'm getting different numbers here. I see it right on when that number came out, but in my other platform, I see 77.80. So that's probably what.
I was trading it, trying to trade it. I never saw it get that high, but off that 80 level, I'd be licking my chops on that because that is a big whole psychological net level for Texas Instruments. That just going out to the monthlies, it hasn't been there. I don't know if it's ever been this high. I mean,
high.
I've got an 8-year chart here up. But obviously back, during, the financial or actually before the financial crisis might have been higher. What is the all-time high for Texas Instruments?
All-time high? Oh, you're going to love this one. 100 even.
Well, it's those whole numbers, they work, Joel.
Right.
$100 on the kisser.
That was
So
back in March of 2000, Dennis, when TXN
that's
was
yeah.
selling a lot of calculators.
17 years later, you're still trying to fight to get your money back. And that is why when you're buying stocks with crazy valuations like you were back in the tech bubble there, some of them never come back. And the majority of them never come back. Some of them did, most of them didn't. So, but that was, we could say, oh, the market's overvalued here. The market was crazy back then. Like Walmart had a PE of 45. It was Walmart. Microsoft had a PE of 70 back then during the tech bubble there. So that was the bubbles of all bubbles. But obviously, we're up. We've come back a long ways here, but still not able to get back to some of these prices that we hit back in 2000, which was 17 years ago. Couple other stocks that were in the news. We had some news from Bob Evans, BOBE. Spencer's still trying to hunt him down, so I'm not sure he's there.
I'm here.
Oh, you are there.
Yeah, I'm back.
Well, what did Bob Evans have to say?
I was talking to Keith Kern in the background there. Bob Evans is, first of all, they issued some guidance. This is yesterday now. But they're also selling restaurants to Golden Gate Capital for a little over $500 million. And they issued some guidance there. They see fiscal year 17, non-GAAP of $2.15 to $2.30 on fiscal year 18 sales of around $470 million. So they reaffirmed guidance on that front and then sold half of their they sold their restaurants for about $500 million. And you were saying that on the pre-market show, Dennis, you were like, what else does Bob Evans even have besides restaurants? I was saying I didn't even know Bob Evans was a restaurant at first, because I just knew them as the place that sold like prepackaged frozen food.
So you've never eaten at a Bob Evans?
No.
It's good. I like Bob Evans, but not healthy. I'll tell you that. When I was looking, at the restaurant list, it was right near the top of the least healthiest restaurant foods you can eat out there. But my dad, he loves it. Bob Evans was his place to go there. My parents are the masters of eating at not healthy places, but they love, they love eating good food. And Bob Evans, I always enjoyed Bob Evans. Joel, you eat at Bob Evans?
I don't think so. I mean, maybe
you never ate at a Bob Evans.
I don't think so. I think maybe a Bill Knapp.
You guys live sheltered lives.
Yeah, I mean, I remember when the family used to drive down to Florida. It was like Bob Evans, Bill Knapp's, or Stookies or Stuckies or something like that. Weren't a lot of choices. But
Waffle Houses are all the way down to Florida.
Yeah.
Waffle House on every corner.
Wow, this is a tough call on this one because it's at 56.40, and that is just blowing away that former high of the move that you had. But I don't know if this was rumored a while ago at 55.12, so really getting into open territory. I guess if you really want to be greedy here, maybe hold out for $60 if it's running like this. 60.15, that was your high in March of 2015. That was also the all-time high. So Bob Evans getting a nice boost here, as well as the S&Ps. Continue to run here, up 10.25, up 10.5 at 22.85. 20,000. Maybe we're going to be talking about 21,000 today, the way this market's moving. But
yeah, I think it's going to hit it today. They're saying in the pre-market, obviously, I think we're at the level. It depends. So it has to hit it intraday. So it has to hit not in the pre-market session, not the futures, but the regular index needs to hit 20,000. It's going to be close to opening right there. I think we're probably going to hit it early. It looks like we're going to get pushed over the top here. As soon as everybody stopped talking about it, that was the catalyst to take us back up to it. Dow 20,000. Yeah, I'm calling it, Joel. We hit it today.
I said that at the top of the show.
Oh, sorry, you're calling. I didn't hear the top of the show.
All right, one stock we're all talking about good stocks. What about Abbott Labs here? Takes a dive down to 39.70. And I looked at some of these healthcare stocks. They're all red. Spencer, you want to give us the numbers on Abbott Labs?
Q4 adjusted EPS of 65 cents. That's in line. Sales of $5.3 billion versus the $5.38 billion estimate. So a slight miss there. Do you see fiscal year 17 adjusted EPS at $2.40 to $2.50? That's in line with the $2.46 estimate. And then you see Q1 adjusted EPS of 42 to 44 cents, a little bit lower than the 50-cent estimate. So a slight miss on the Q1 EPS. Overall in line for the fiscal year EPS, and then in line with the Q4 earnings and sales.
I own it in my long-term investment portfolio. I've had it in there for about 7 years. I've got AbbVie from it now, ABBV. I've held both of them. This is my never sell portfolio, but it's my hardly sell portfolio. And like I said, it's been in there about 7 years. I'm sticking with it. I mean, the drugs, we're just going to keep saying they're out of favor. Trump's going to, not help here. It doesn't look like with the drugs either. And I don't know what's going to kickstart them. There's good value in a lot of them, but you look at Biogen now, it's starting to break down near the lows again. Celgene, even my Sarepta, Joel. The Sarepta, I sold part of the position. I wish I would have sold it all. I sold part of it at 36 and change. It's all the way back down here to 30 just 6 days later. If you're a drug stock, you're just simply out of favor. Gilead keeps sinking there too. I mean, drugs are a big part of my long-term invest portfolio. I love the dividends that they pay, but it's been the underperforming part. So because drugs just are out of favor.
Yeah, and it just seems like there's a lot of other places to put your money. Kind of taking a quote out of J.C. Peret's book. I mean, do you wanna look at a chart like Gilead or things like this? Is there a better place to put your money? I mean, you can look at some say, oh yeah, there's big institutions accumulating it here, but holy mackerel, we may be on a record streak here for Gilead, Dennis. Let me count the down days in a row here. Going back
every rally, every time it rallies $2, $3, $4, these almost short squeezes to sell. From a short-term trading perspective, it's just been, how many down days in a row?
9 out of
Holy
10.
cow.
9 out of 10. 9 out of 10, and that
9 days.
Yeah, and the up day was a mere 22-cent gain. But Dennis, I know what stock that you're probably going all in your portfolio today.
What?
Dry ships.
It's down again. Is it down again? It's up in the pre-market. Look, dry ships is actually up 2 cents here. It's a good day for dry ships. It's trading up 2 cents here in the pre-market. But what a debacle this company is. I mean, it just keeps, reverse splitting. Reverse splits 2 days ago, adjusted close 8.11. 2 days later, it's already been halved, basically, back in the 4 handle here. And if it keeps going at this rate, they're going to have to reverse split it again by the end of the week.
Yeah, I don't know. The only one that might have a stomach for trading this is Ace. Ace, I don't know. Please let me know if you're trading this, because this one is incredible. Violin Maker, welcome to the show this morning. We can take a look at Vail, and is that Vail? Oh boy, it's an ADR. I know absolutely nothing about this company.
Nothing.
So,
I know nothing about it.
Oh, nice march up, trading at 10.96 yesterday. I don't know if there's any big seller at 11. I don't know. Nice march up here.
I can go look at the book, but this is a NASDAQ stock, though.
Yeah, it's a NASDAQ ADR. I mean, it looks open between 10 and 12 here.
No, actually, it is New York stock.
Oh, it is?
Oh, you know what? There is stuff in the book. It's always good to look at the book. 1099, 170,000 shares up there. And then 1095, 38,000 shares up there. That's like the Rock of Gibraltar. That is a lot of stock to chew through. And that's probably why you saw the stock top out of 1096 yesterday. Because you've got literally 1099. And there might be something else at 11, too. You got a couple 100,000 shares to chew through there. And it is, again, I'm going to keep reiterating. Everybody loves their charts. They love their technicals. I'll tell you the best indicator that I've used in my 17 years is order flow and looking at the big orders in the book. And when you've got a big order there, just logically think about it. When you have a 200,000 share order there on a $10 stock, it takes $2 million worth of buying power to take that order out. So that's, the main reason why these orders top stocks out. If somebody's not buying $2 million worth of that stock, it's not going to go through it. So unless the order is fake or it moves, but a lot of times these orders in the book are real. And then you don't see a lot of fake orders in the book as much as you used to. You see them like, the high frequency market makers. You see a lot of fluff there. But when you see these big institutional orders out there, the big size, you don't see the fake ones out there as much anymore because they've cracked down on that stuff. It's layering when you put big orders out there and move them and, you're doing fake stuff like that. People go to jail for that. They saw Sario, obviously going to jail for that during the flash crash. And, and that's why the big orders in the book, a lot of them are mostly real now. There used to be a lot of fake orders in there, but because they've cracked down so much on layering now, which is a good thing, you don't see as many fake orders, on the big size out there in the book anymore.
This stock trades a lot of stock. 41 million it traded yesterday. So, I mean.
Oh, did it? Oh,
yeah.
I didn't know it traded that kind of volume.
Yeah,
so I could
I'm
pick that out
shocked.
then.
I'm shocked. So I don't know. It should be able to.
Did it really take? No.
I know. I'm looking.
News.
I've counted like that 1, 2, 3.
Does trade a lot.
Yeah. Real quickly here, Dennis. I know we've talked about this before. Wait, Dennis, you take it out. Where can I see the order? Where the order flows? Where are you finding the order book?
Well, you got to subscribe to that. So ask your broker. Most brokers, probably, I don't know if your broker has it or not. Obviously, I'm, using prop accounts, so there's different ways. I'm seeing, I'm using Goldman Sachs Ready Plus platform, and he can see all this information. He can subscribe to it. The NYSE order book is one I like the most, and you can subscribe that if your broker has it for $60 a month. And you say, whoa, $60 a month I can't afford to pay. I'll tell you, the reason that I am profitable every year is stock trading information. It's not a free chart looking at that, making me profitable every year. It's all the other information that I buy. I spend almost $3,000 a month in information. So I have $3,000 to break even, not even talking about, commissions or anything like that. $3,000 of fixed costs every month that people say, wow, why do you spend that kind of money? You know why? Because I make money off the stuff. If I buy something, and I'm paying $60 a month for the NYSE open book, if I get one trade and make $100 from it, I'm up $40. And I'll tell you, I make a lot more than that off of it. So, you can't be scared. Once you get to a certain level and you're doing this for a living like I am, you can't be scared to make money. Or to spend money. It's like any business, people say, oh, well, I don't need a news provider, you don't need a Benzinga Pro or something like that, but you do. You've got to spend some money to make money, because if you don't have that information you're trying to find on Twitter, and this drives me nuts too. People say, oh, well, you can get all for the information off Twitter for free. I'll tell you, Twitter is still typically way behind. On 90% of the time, it's typically behind the news providers, because somebody's tweeting and they're grabbing it from a news provider. So it's secondhand information. So you can go to StockTwits, you can go to Twitter, and you can utilize that stuff for free, but it's not good enough for me as a professional. If you're like a swing trader and you're doing 4 or 5 trades a month and you don't mind getting secondhand information, that's a completely different story. But for somebody like me that's making hundreds of trades a day and moving in and out and, doing this for a living, I need information. I can't be afraid to spend money. And that's why, I subscribe to the open book. I subscribe to the Erica book. I subscribe to, pretty much everything I can subscribe to. I have multiple news services too. Well, Benzinga Pro, I think, is still the best bang for the buck. And you just have to have information. I have scanners that I subscribe to, different ones I've talked about before as well. MadScan's a good one out there as well. There's a lot of information. You can't be afraid to spend money.
All right, Don, let's wrap things up with a couple stocks here. CENX, this thing has been on a tear. I just counted it up, traded up, and I believe 9 out of the last 10 trading sessions, trading a little bit down here this morning, not by much.
Freeport hit it.
Freeport hit it. I mean, me, I would have booked profits in this thing at 13 or 14 here. Wouldn't like to see it take out yesterday's low at 14.55. If it starts to rally back, we're not far from the mark here of 15.72. So see if you can get green on the session. Yesterday's high, 16.24. And Dennis, any comments here on NEWR from a technical standpoint?
NEWR? That's an interesting one. New Relic. This is one I don't know either here. This is trading up. Oh, this is on news or something. This is getting taken over. It's up $6 here this morning. 200,000 shares. It's traded 40. What's the news, Spencer? Do you get the news on NEWR?
There's no.
I can go hunting here too.
Yeah, nothing.
There's nothing really.
Well, there's got to be news on it.
There's
Stock
gotta
up
be.
6% here with no news, or 20% here with no news. So NEWR, anyways, we're looking at this one here this morning, trading up 20% here. It looks like this is some type of takeover or something. I'm just going hunting down. Search Cisco. Cisco is going to be buying App Dynamics. And I don't know how this applies to NEWR. Is this a stock in sector, maybe?
Or maybe they have a stake in that company or something.
Maybe.
Cisco's buying them. Thank you, Spinner. Cisco.
Cisco.
Yeah,
okay,
Cisco.
So
thank you, Spinner. With the save, Robo here. We were talking robotics yesterday. Nice move yesterday. That's an all-time high for the CTF. So kind of sticking with that theme we had on robotics and automation.
Wait, Cisco's not buying...
They're buying App Dynamics.
Yeah, Cisco's buying App
which
Dynamics.
Is...
They're a competitor to NEWR, but they're not NEWR.
Okay.
And App Dynamics, I believe, is off the board. That was a private company.
Yes, that's correct. Dennis.
So then people are saying, okay, well, what's getting scooped up here? New Relic. So they're saying NEWR as a sympathy play here is getting scooped up because it can't come in and obviously trade App Dynamics. App Dynamics used to trade, I think, actually, but it's already, moved to a private company. Cisco buying that, so now people are speculating that maybe New Relic is going to be in play here too. That's why NEWR is trading up substantially in the pre-market. But I will say, $40 is just a big psychological level. Not only that, go out to the charts there, Joel. multiple highs back in October and November of 2015. We're going back over a year here now, right up near that $40 area as well. So that's the big psychological hurdle here this morning. It's trading right there right now.
And wait, I
right,
just want to real quick,
Dow
Brent can I just say Brent just filled me in. There was a KeyBank analyst this morning that said that the acquisition of AppDynamics speaks to the value of New Relic. I think that's your catalyst there.
All right, wrap things up, Spencer.
Okay. Thanks for listening, everyone. On tomorrow's show, we're gonna have Keith Curran on tomorrow. Wasn't on today. We'll get him on tomorrow. Had a few technical difficulties there. Also talking with Jeff Hirsch. You've heard of him before because he and his father before him started the, what was it, Joel?
The Stock
Traders Almanac.
Yep. That was a test. All right. All right. So Jeff
Everybody's got a Stock Traders Almanac.
Okay, yeah. Jeff Hirsch.
Seasonality traders, it's a must.
Jeff Hirsch and Keith Curran on tomorrow's show. Just want to remind you folks that today's show is brought to you by Chaikin Analytics, with their groundbreaking stock research tools, including the proven Chaikin Power Gauge rating and stock discovery engine. Chaikin Analytics simplifies complex investment decisions, and it's all presented in an easy-to-understand platform. To learn more, visit chaikinanalytics.com/premarket. That's Chaikin, CHAIKIN, analytics.com/pre-market. Hope you enjoyed today's show and our chat with Chris Temple. If you missed any part of it, you can catch the whole thing on YouTube after we're done here, or the podcast goes on iTunes, SoundCloud, and Stitcher. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Hope everyone has a good rest of your day, and we'll be cheering along with the Dow as it maybe not crosses that 20,000 threshold. Have a good rest of your day. We'll be back with you folks tomorrow.